Oops, diddy doop more numbers. Jobless claims. Initial claims were 232 versus 230. Again, we don't usually. Only the money managers use it to justify, their investing, that type of thing. Unfortunately, that's the way it works, and there's no stopping that because they don't have any other, basically, measuring stick to deal with. So they're kind of trapped in that stuff. But good morning, good afternoon, and good evening somewhere. And there we are. There is this spreadsheet. Let's see how it looks this morning on the dollar index. And we have the dollar. Oh, do we have it up there? No, here, let's go like that. There it is right there. There's the dollar index making a little teeny weeny little bounce. But it's been in that daily sell for a while, that weekly sell for a while. And obviously, right here on the chart is lower here. So obviously, the weekly sell worked. Told us the rational trend overall. Now let's take a peek at the spreadsheet right there. And it shows, 6 weeks in a sell. This is the 7th week now. There's number 7. And you can see it's in a daily sell for going on an 8th day. And on the spreadsheet it says 7, of course, because that's what it was from yesterday. We send that out, and after the markets all close in the United States. So, and if anybody does care to want to have a spreadsheet, you just go to this website and you'll be able to get it for free. We've been sending it out to free for people for decades upon decades. So, it's just right there. You just there's an email address somewhere on there. I think it's right there. You can see it right there. And that's the Chicago Quant Technologies. It's easy to Google. And if you really have a deep desire, you can always give them a ring at the office there. So, that's the spreadsheet. That's why it's up on the screen now. We try to, show you how we correlate what we're seeing here on a chart to its specific product. And that's what we do here on the webinar. We go through every day. We take a look at the weeklies and the dailies, and we'll even look at the intradays if someone asks for it, or I have a particular reason to point it out, that type of thing. So, all right. So you can see what I keep on hearing over and over again is that the Secretary of Treasurer, or what most countries have as a Minister of Finance, and I understand she is constantly buying bonds instead of selling them, and stockpiling them and taking money from other places where they're selling it to buy them to make the interest rate go down, which when the interest rate goes down, obviously the dollar has a natural tendency to at least go sideways, if not down. And so that's what's going on there. And so, it's not like they need to have dollars. Like, I got to have a dollar. Hey, Janos, I need to own that dollar. I need it. It is a flight to safety on some level. Also, it's an investment. If you're paying less in interest, I know there's a lot of people out there that are, because of zero interest rates, because of quantitative easing, has been confused now for 15 years. This is what happens when the politicians get full control of your economy. They do strange things that don't match up to the reality of, finance. But that's where we are at this point. We've lived through the era of minus interest rates, not only zero interest rates, but minus interest rates, which is even crazier. Crazy. It's so crazy. But that's what it is. And so right now, interest rates are trying to drop in the States. And as they drop, what we get is, we get this action that makes the dollar go down against other pairs trades. So let's just, for the fun of it, let's go over to the euro. Let's take a look at the euro-dollar pairs trade. And so when that's the great experiment. We'll get back to that. But here's the euro. And you can see it's dipping down a little bit today. It's been in that daily buy right there. It's been in the weekly buy since there. So obviously you can see on the chart here, here is definitely lower, and it challenged it, no doubt, and we were in a sell when it did. But it's definitely lower than it is here. You can see that. This is higher than this spot right there. And that's because it was going up, and we got a signal from the market through our mathematics that it wanted to go up. That's what it wanted to do, and guess what? Almost 9 out of 10 times. It's 8.6 out of 10 times it will do that. For the last 50 years, it's done that, and basically, I've been using it for almost 50 years now, and it seems to do it consistently, no matter what's going on, be it a crash or whatever. Usually, it spits that out. It tells us, "Uh-oh, be careful." We're in sell and sell and sell, and it doesn't want to go up. And you think you can bottom fish doing the buy low, sell high thing? Wait for our signals. That's usually the most important thing of all, is just waiting for our signals. That's the best thing of all. So, let's see. Giannis is on there. What is the outlook for the SPY today and tomorrow? Well, let's take a look. Let's see what the SPY is doing. Open sesame. We're going like that. And let's see. We're going to throw on the intraday too, but here is the SPY. There we are. Whoop. And the SPY, it's, let's see, what is that? That is, and that is Monday? That's Monday, yeah. So I'm not sure why 22 wants to dip so deeply, but I guess, we'll see. When it first, this is kind of the pre-market. Anything's possible. Could have been a bad trade. You can see we're in a daily buy now for, what's that, 4? That's 8. We're going on a 9th day. When you look at the spreadsheet, let's roll down to that. There's the SPY. And it shows 9 days in a daily buy, and it shows 1 week in a weekly buy. So obviously the trend is your friend, and it's trying to lift. We're going on a second week of buying. It looks very high up in here. You can see how it's climbing and starts to zigzag. I would say over the next 2 days, sideways up. That's what I would think. I would be a lot happier if the daily was not banging through the manifold. Let's widen this out for you. This is how you read it. Notice that it kissed on this last move. It got so tight, the manifold here, that it kissed. It was just almost touching each other, and then we got into a daily buy off of that, and you can see, obviously, the strength was there, and you can see the fast algorithm was climbing up. Excuse me. Let me take a sip of water. The fast algorithm was lifting up at the same time, so that meant that there was definitely faster, hot money moving into the market on a week-to-week basis. And you can see here the slow, or the histogram, and the green line was underneath. And it did close in the weekly buy, but it was really making a challenge there for a while. So I would say that the only thing that's disappointing me at the moment is the fact that the green line is underneath the manifold. Now, if it will turn back up today, I would say that, here's today Thursday and tomorrow's Friday. I would say more than likely it would probably be more up. Maybe take out the all-time highs. We're right near the edge of it. And the closing all-time high right there is, what's that, 62.10, 562.10. And we're at 561.60. So 60 cents is not exactly the most challenging thing. It can be done. What does the algo show during the ongoing Jackson Hole drink on party? Yeah, really. That there's more buyers and sellers, obviously. There is opportunity now to lower interest rates. And, stock markets like lower interest rates most of the time. So, basically, there's probably strength out there, constant strength, and you can see it in the weekly, you can see it in the daily. And we can go and look at something a little bit more dynamic, and that is the S&P 500 futures daily. Notice it doesn't have that dip down there, but at the same time, its green line also is below the manifold. And you can see that it's, it's in a 1 week buy, and that is, where's that Right there. 1 week in a buy, 9 days in a buy, just like the stock S&P 500. Cool, 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 and cool. And then, let's see if there's any more of a question there. We'll go dissect it. And let's see, right there it says, there's Janos saying, oh no, that's Robin saying hello traders. Okay, so I've answered that one. Jackson Hole is going to be interesting in the aspect of, they're going to have to deal with that employment number and probably, say, wow, are we really starting to drive towards that recession? So, will the numbers give us, a justification for lowering rates? I would say that the unemployment situation, there's talk that we could see a unemployment number in September at like 8.5%, 9% or something like that. It's like, in other words, things could get really, really ugly. So, the job of the Fed is to kind of keep inflation down and keep the employment rate down. So they may start trying to lower rates, which I've been saying, things are falling in that direction. And as much as we're not happy about the inflation, because, see, the problem is that the government is doing incredibly bad things, for the last 3.5 years for inflation. In other words, they've been increasing inflation over and over again because they want to spend money. And the money is not working to stimulate the economy, because you can see here the job numbers are reflecting the weakness. We're seeing GDP down in the ones and twos, and we're not. All we're seeing is a stock market being force-fed cheap money. And so we have this conversation every so often, and that might be the title today: cheap money force feeds market. I like that. Oh, I like that. I'm going to send that out right now so I don't forget it, because I'm going to explain how that works. So let me do that, though. Let me send that out. So the new title for right there. So today's title, I'm already forgetting it by just typing. All right, title. Cheap money. That's it. Cheap money feeds stock or it feeds markets. Because I could explain also. I can also explain why we see the euro in that weekly buy now for a bunch of weeks. So cheap money feeds markets. That's what it comes down to. There we go. And how I explain that is very easy, and that is when you're a money manager, and be it a mutual fund or a hedge fund or a retirement fund or just did I say mutual? Just a fund itself. When you have more cash laying around, your job is to buy things. So whip inflation now. That was Alan Greenspan when he was Secretary of Treasurer under Richard Nixon. Yes, whip inflation now. They had win buttons. And so, at that point, was it Sam Rayburn might have been the Speaker of the House. And so, the Republicans, the real president, let's see. Let's look that up. Nixon years. Speaker of the House. Let's see. Richard Nixon was an American politician. Let's make it President Nixon. Maybe that. I don't think they want to tell me who was doing anything, but I can tell you I remember Who was Speaker of the House during the Nixon presidency? Yes, there we go. Carl Burt Albert. And what? Carl Burt Albert from it was an American lawyer and politician who served the 46th Speaker of the House in 71 to 77, who was 68. They do a real good job of hiding facts. I love how they do that. How about 68? Speaker of the House in 1968. Let's see who that was. List of speakers. There we go. They'll make it hard. They don't want to show you anything. But, the Democrats have been running that place a long, since the Civil War. At the end of the Civil War, in the 1870s and 80s, they've been running that place like clockwork. Let's see, 85 was a Democrat. I think it was, and that's 1885. Then a Republican from Maine for 1 year. And then Democrat. And then a Republican from 1895 to 1909, and then from there it was Democrats again, and then Democrats, an enormous run in Democrats, and let's see, who was it in, there it is. So McCormick was the Democrat who was, let's see, and then Albert was there from 71 to 75, 76, something like that. Tip O'Neill from there. So, they had so many Democrats in the House that Nixon couldn't do anything. Matter of fact, half his cabinet was Democrats. Couldn't get anything approved in the Senate. So basically, what I'm trying to say is that, when they say Nixon did this or the win buttons or inflation, do you have yours? Yeah? Cool. Hey, Bio First. Hi, how you doing? I think we're going to try to mix up some times and try to do earlier for you, too. What were we talking about? Oh, yeah, so they're force-feeding the money into the markets because they need the market to stay up for a multitude of reasons. One is, they're talking to a Boston president now, and the Fed Boston president out in Jackson Hole on rate cuts. Boston Fed president on rate cuts. So I think there's a good chance you see something in September. I think Trump said that yesterday too. In other words, he said, someone was trying to get him to say something. One of the reporters was saying to him, what will happen if Powell lowers rates in September? How will you view that? And he said, well, you can see what the Bureau of Labor Statistics put out today. It said that there's 818,000, almost a little under 1 million people less in the workforce. So obvious, he said, so that change, makes, I forget how he said it, but he said that shows where the economy is, like that. They didn't like that. They wanted him to say, I'm gonna hang him, or I'm gonna, kill him and stab him and kick him in the teeth. They wanted something like that. Instead, he talked about that. So would you believe last night the Democrats said he's a liar? They said Trump is a liar. And then they said, but it was from the Bureau of Labor Statistics. And she goes, well, this was the Commerce Secretary of the actual Commerce Secretary. And she said, well, I don't know what that is, the Bureau of Labor Statistics. It's like, what? What are you following? What are you making decisions on? It's crazy stuff like that. Crazy stuff. Crazy stuff. So, basically, what you get here is, you get this strange situation where no one's really paying attention to the economy on the Democrat side. And that's probably why we have such inflation and we have so much problems. And, it's an ugly situation, very ugly. Yep, yep. So, so they're force feeding. What they're doing is they're forced to make it easy for money to go into the market so that the market won't fall down because the economy is not in great shape. So the last sign of success will be the stock market. They'll be able to say, "Look, stock market's at all-time highs." Problem is that it was at the same all-time highs under Mr. Trump. So really, in the end result, is the market hasn't really gone anywhere, and that's the problem. And I think we can show you that. Let's see if we can show you that. I might be able to actually show it to you. Could I show it to you? Let me see if I can do that with the SPY. Let's see if I go like that. Do I go back 4 years? That's all it is 4 years. So it's not the toughest thing in the world. I think we can scrunch it up on there. If it's not, we'll go to another charting system. There is 22 right there, going in, 21. Let's see if we can add a few more. Let's see. Let's see. There we go. There we go. Let's see if it kicks out. I'm going to go to a separate chart because I'm very curious, and I know the separate chart will give us a better feedback of it all. Well, good. Glad to hear. Glad everything is doing good there, Bio First. Health and everything else is a good thing. Let's see, SPY or diamonds. Let's just do SPY to start off with. And let's make it 5 years. Yeah, so you can see here, during the Trump years, I guess it was in the... Yeah, so it has gained much more. No doubt about it. Look at that. It's definitely stronger. It went down to that area at one point, and... Oh, you can't see this. Here, let's do this. You can see it. It went down to where Trump left. That was his high, and it went down to there, and then basically, from here, let's see, we're at there. So it's added this right there. It's added this. So no doubt, it's higher. Also, at the same time, our balance sheet by the government is enormous now. It's trillions upon trillions out there. So they're pumping it up. That's pretty much what it comes down to. They're pumping it up. And there's no stopping it unless we get rid of the spenders in there. And that's really what it comes down to. Got to get rid of those spenders. There we are. So, in the end result is that the market is higher, and the government has been spending it. They built, what was it? Some insane number, 10 charging stations. They put out $8 billion, not million. $8 billion. I have no idea where the money went. But they were supposed to build 1,000. They built 10. Yeah. They're supposed to build 1,000. They built 10. I don't know where the rest of the billions are, if it's still sitting on in an account somewhere or what. But they're not very efficient with money, but it's been already borrowed. That money was borrowed. So it's somewhere. So that is the magic that we go through all the time, and and there's no stopping it basically in the end. Um, so cheap money is powering, it's forcing the pairs trades up. We keep on warning you about that. And and basically we expect to see the dollar drop back around to one even or lower. The dollar index. When the dollar index is over, let's go back to the dollar index. There you go, right there. And so there we are. No doubt, the market has done a fine job under Mr. Biden, and I guess you could say they paid for it. In other words, I just heard somebody on there say that for the amount of money spent, if he did that for his fund, he'd be bankrupt. But with the government, they don't have to get a return on the money. They borrowed it, and it's going to be borrowed forever and ever now until they pay it off. So, let's see, where am I at? I'm trying to bring something else. I want to see what the Dow. Let's see what the Dow looks like on the same type of chart. DIA. We'll do the 5-year thing. Yes. So we're looking at basically somewhere around in here. That was all-time highs during the Trump years, and they've come down and challenged it at times. You see the weakness here, but overall they've added. They've definitely pushed the market up with no problem. They have run it up, and the borrowing. That's why we have the inflation. You think, oh, you can. The Democrats believe you can borrow money and just spend it, and there's no effect. And they're starting to learn that there's a big effect. Businesses are collapsing. Job increases are coming from government only. In other words, it's between the medical fields that the government support, or government agencies are hiring people, but private businesses are losing. And that's bad because, remember, government agencies pay the people not through profits. They do it through taxes. So they're just taking more money out of the system and hurting the economy more, doing fewer goods, which generates inflation, and things are going up. So money is cheap to push the stock market up so they can say, see, don't you want this to stay this way? Vote for us. It's like when they try to give away things all the time. All right. So that's what I meant by cheap money feeding the markets. It's what's going on, and it's not very profitable, I can tell you that, for the U.S. government or the population. Inflation has, as much as the stock market's going up, 12 or 14% or 18%, whatever it is, inflation has jumped anywhere from 50 to 100%. That's the problem. So in other words, when you used to have a mortgage on a house, the mortgage was almost 100% cheaper. 100%. So your mortgages have doubled. Rent is doubled. Food has gone up 50, 60, 70%, depending on what it is. Clothing and cars all have risen dramatically. And pays have dropped. As much as they say pays go up, pays have gone down compared to the inflation rate. So it as much as you would think, well, why not? Let's pump it up. See, that's what they tried to do in the Soviet Union. Borrow money or take money and use it for pumping up things. And you can see how that worked. It went bankrupt. You can see the same thing in Venezuela and Cuba and pretty much all the major socialist communist countries. And you can see Sweden, which was a socialist country, has now got a conservative government because the people are tired of paying for things that don't pay off. So, as I sip another glass of water, what you see is that you end up paying for what you get. And if it's not, it would be fine if the markets went up like this and had no inflation. So, in essence, because of the expenses and so forth, the inflation is basically taking away your profits. That's what it's really doing. Inflation is robbing you of profits. And there's no stopping that. until they stop spending. Stop spending. Oh, there's the family barbecue. When is that? 3. Oh, okay. Is that a Saturday? Ah, nice. Maybe we'll pop off to that. There we are. So. Let me just see when the 6th is. I think that's a Sunday. That's a Friday. Okay. Makes life even easier. And that is exactly the problem. That is the problem. And there's no stopping it. And so until they remove these people out of the government. And that's what it really comes down to. All right. From there, let's see. What else have we got going on here? Let's go take a look at the British pound. Let's see how cable is treating us at this point. Let's see. Right there. And let's go like that. There we go. Inflation is a tax. It really is a tax, and it's very disappointing that, under the Trump years it was only like 1.4, and now in the Biden years the average is something like 5 point something or 6 point something. So it's like it quadrupled, and that's just ask the people in Turkey what that's all about. I'm sure they're in what I call supersonic inflation, and you can see here, the cable went into the daily buy, fell in the weekly sell too at the same time during the revolution, as they were saying, for days upon days and weeks upon weeks. This was the revolution 3-week period where they just talked about revolution. And after they locked up a couple of daddies and mommies for complaining about violence, it seems like they've awakened to the fact that violence is not good for an economy. And so it sounds like something is changing over there. And you can see here the weekly has turned back up again with no problem. Matter of fact, I think I'm just going to grab one of the weeklies like there. Let's steal that one. Right there. There we are. So it's starting to climb up into that buy all week long. Looking good. You see it on the spreadsheet. Where are we on the spreadsheet? There is cable right there. We are 2 weeks in a sell and 9 days in a daily buy. So it's pressing, and this inflation thing is so punishing. So we'll just sit back and let it be for the time being and go from there. Now from there, let's see. Let's take a look at the Swiss franc, the inflation fighters. And as the franc goes down, it's gaining against the dollar, whereas the other two products, it goes up, it's gaining against the dollar, because it's a Swiss, not Swiss dollar. And so you can see there it is, 4 days in a sell now, and a bunch of weeks in a sell right there. Same thing on the spreadsheet. So we can put that. Right there. 12 weeks in a sell. 3 days in a sell there. Cool. Then we go to yen. It seems like they've calmed the yen down. Matter of fact, they've got 2 women now running for prime minister, so it looks like they're definitely going to have a woman prime minister somewhere along the line now. And I don't know if it's going to be the LDP. Usually the LDP wins. They seem to control everything. But we'll see if it's the LDP or the other parties that might put one in there. All right. And that is the yen. And the yen is, how can you say this? The yen is, kind of sold off the top. It's sitting back here. The Federal Reserve seems to be involved somewhere along the line, but that's all right. Let's grab this sell right here. There you are. There we go. See, it's trying to bounce up. It's giving us a little warning. We got a green and a red. The line is getting up to the zero line. But we're still in that weekly sell, and it's not that bad. Fast, hot money is definitely moving in. That's for sure. And then we go to supersonic inflation, the great experiment. Another closing high yesterday. It's at another all-time high today. And it's at a closing high at the moment. You can see we're starting to curl over a little bit here for the last couple of days, just like this. So we might start looking like this again. Sideways, just bouncing around the 38. Unfortunately, I think this thing's going to see the 41-ish, 75, the 42, 75 area. It'll come somewhere along the line, especially with that weekly buy. Wow, look how high up that weekly buy is. Let's contract that. See, last time we saw that beast. See, it's the amazing thing is our algorithm was that high and higher in April before they went sideways. So. Now from there, let's just double check the chat line, make sure no one's asking a question. All right. So the cheap money's got everything popping. Pop. Popping inflation, popping prices, popping everything. And then there it is right there. There's the South African Rand. You see the pressure on it the last 3 days. Moving back up. We really think when you compare Rand to gold, it should be around the 12 area. So there's a 33% haircut going on for the South African Rand. In other words, things are a little bit tougher. I mentioned it a couple days ago. This is the first election since Nelson Mandela where they lost power, the ANC, and they're in a shared government now. So that is definitely an issue that it's hard to how you put that into the combination. How do we figure or think about that whole process? To me, the South African Rand is going to have problems until they can clean up the government even more. But at least the Zulus and the, I think it's the DA party, that's the old, party that was maybe more conservative, actually, whereas the other party was kind of liberal Democrat type thing. And they allowed all that strange voting where they allowed people to have half a vote, where they should have had no vote at all because they were illegal immigrants. But that's a whole different story to talk about. So let's take a look at gold and see what gold looks like. There it is right there. You see gold is trying to, look like we were in the sell yesterday. It closed underneath right there. And then today, that's the exchange prices. I fixed it to the exchange prices and changed altogether. So we got a green and a red. Now today they're trying to push it again into the sell. They're going after the lows again, but not that much damage. And you can see here on the spreadsheet and on the screen, as you see right here and right there, the weekly and all like that. And then we go over to gold. There's gold, and we're looking at 7 weeks in a buy. We're looking at 1 day in a sell. Remember, like I said, when we sent those charts out last night, it was in the sell. It doesn't really matter that much, solely because we're in a weekly buy, so you're not taking a short or anything like that, but you wish you could, because it's definitely trying to show that weakness again. So, there's the gold. Let's take a look at silver. There's silver. Silver's acting much stronger. I'm kind of impressed, and it's trying to get into the buy. Matter of fact, let's grab Where's the buy? No weekly buy? All right, let's find one. Yeah, look at that. There, you can see that it's climbing into the weekly buy, and it doesn't seem like it's going to let go. It's that $30 area seems to be a real challenge all the time. It seems like it's a real battle. It's constant, day in, day out battle. The $30 area and the $26 area seem to be the magic out of it all. And we mentioned this yesterday, and that is, gold is at all-time highs basically. And the all-time high for silver is like 53 or 54 or 55, right around there. And we can't get that thing past the 30s. It's like 32 is moved up to the 32 about last month in July. But they can't get that thing rolling. That's still, even in the low 30s, that's a 40% below all-time highs. 40, that's right now with it trading at 29, it's still in the 40s. It's like, why doesn't it not want to climb? I think they use it to hedge personally. So they sell the hell out of it. Same thing with platinum. And then we go over to, remember the South African rand is minus, so it's losing against the dollar the last couple of days, and you can see here they're stalled out for the last couple of days right there. And with gold, it's even a little bit more pronounced right there. You can see it. It's stalled out for the last 3 days, and at the same time trying to get into a sell. But the weekly looks fine. There is copper. Copper's trying to get into the sell. It's been in that weekly sell, daily buy thing going on. You can see it where it says copper on line 15. Let's highlight it there for you. So we emphasize the spreadsheet a little bit more. And you can see we got 8 days in a daily buy, and we've got 7 weeks in a weekly sell. Or is it 6 weeks? 6 weeks. 5 weeks in a weekly sell. And this is going on the 6th week. So, and as you can see, where we went into the weekly sell in this area here, right there, you can see that this area is definitely lower than there. And even this is still lower than here. So, you see the weekly sell worked again as usual. 8.6 times out of 10. So it's like 86 times right and 14 times wrong. Good odds. Now you can see platinum here trying to press its way down. We got a green and a red. It's underneath. That's why we have the little dotted line there for tomorrow. And you can see the weekly is trying to lift its head up. It went into the fast a couple days last week, and we were in a daily buy. It barely moved. It did go higher, but not the most explosive action. Well, probably because we're in a weekly sell. So it made it very hard for it to try to lift. The longer term money, week-to-week money, had no real interest in reaching for anything. I understand betting-wise, Mr. Trump is doing really well again on the election. During the Democrat convention, it's getting lifted, which is really surprising. All right, and that is all the metals. So from there, and we'll just show you the South African rand again. See how it's trying to lift up, which means they go down in value. Now we'll go over to crude oil. Right there. And there is crude oil right there. You see, we went into a daily buy last. This is a flip for the chart. So the September contract never got into the weekly buy. But the October contract did climb into a buy. But as it climbed into a buy, we went into a daily sell. So we're stuck in the neutral zone. Boy, like I said, you can buy binaries to play some of the stuff, but you don't want to be, you wouldn't be short the actual crude unless you're a producer. Then it's safe to do it. But as a trader, no. Because we were basically flirting with a weekly buy and a daily sell. So it's a neutral situation. Yeah. Okay, so there is the October crude, and here we are. Let's see what Brent is doing. That's another thing today. I might be able to get that data back up soon, very soon. I think that's tomorrow. We'll do that one tomorrow. All right, so here is. Let's go over to here and put Brent up on the screen. And there's Brent. And you can see the same pressure on it. It follows the West Texas all the time. It's popping up a little bit, just like we are right there. Trying to pop up a little bit, just a little bit. But overall, just feeling the pain. And then from there, we go over to heating oil. Because that product is used so much in so many things. HO oil is used in the jet planes. It's used in the diesel trucks, the diesel cars, and then at the same time we use it for heating oil itself. We burn it in machines at our houses to heat our houses during the wintertime. So that's the action we're seeing there, and you can see that sell from there. And we've been in the weekly sell, so some from up in the 250-ish area. So here we are in the 226 area and still in that weekly sell and in a daily sell, which was a nice winter chicken dinner. This one was really rough to hold on for. That's why we always support the binaries more. It got short here, and it finally did drift down about 12 cents, but it tortured you for a little while and was up about 7-8 cents. Let's see what else we got going on here. Now that's interesting. Oh, that's probably because it's a different month. So we went into a sell here. So that was a half decent little ride. Nothing major out of it. And then it went into the buying and back into the sell again. So it's been choppity. And this is the front month now, the October. And then we go over to natural gas right here. And natural gas is showing us some pressure on the downside there. How about that? We were in a buy for 3 days and it's going nowhere. We've been in a weekly sell on that poor thing since back here in June, up in the $3 area. And sure enough, this thing is just gliding south. I think we're getting ready to go out of the September contract into the October contract in another week or so. We'll have to adjust that. I wonder where October is right now. Let's go take a look at it. Just throw it up on the screen here. Look at both of them. Let's see, right there. And we'll put it up so you can see it right there. You see September has 23,879 and October has 22,631. There's only about 59,000 open interest in the SEP, and there is 253,000. And you can see the November one has 210,000. You can see they're hanging out in the $2 area. October is at 225, and September you can see right there is at 210. And then you can see it starts to climb up, for the colder months. 2.6 and 316, almost 346. Then in February it starts to dip over again at 330, $3 in March, 287 basically in April, May 292, $3 again in June, $3.25 in July. We'll see how well they hold up. All right. Oh, wow. Freedom. All right. And so from the natural gas, the heating oil, the Brent, and the West Texas, that finishes us off there. Let's run over to... Go take a look at the stock indices and see what's going on. You can see the S&P 500 at close to all-time highs. There it is right there. showing that strength. Weekly for a whole week, going on the second week. We got the Tech 100 right here. Right there. It's got a lot more work to do. It needs to get up almost 1,000 points to go to the all-time high. You can see it's climbing into the weekly buy with no problem. So let's put that line in there like that. So I'd say, Giannis, yeah, there's upward strength going on for the next 2 days in that area. Save workspace, definitely. And then we go and look at, we've seen what the Dow Jones Industrial Average has done. We've pointed that out a few times. I think this is the second or third week. Yeah, this is the third week in a weekly buy. And I guess that's the all-time high right there. And so, we're battling our way up. It's been in that daily buy. Look at that. It's been in a daily buy for weeks. And, it's trying to get into it's trying to get into a sell. It's right on the edge now. It's just underneath there. What options show for the POW event? Let's take a look at the straddle. And we can see what the straddle looks like tomorrow and see if they're anticipating something. One thing I did notice, let me put it up on the screen. I noticed that we're getting a little leading action in the VIX. See, it's trying to climb up into the buy. Weekly's in a sell, so I'm not that concerned about it. But I guess maybe they're closing out shorts. Traders closing out shorts and they put a little pressure on it. You can see there it's trying to get into a buy at the moment. Now let's go take a look at some of the option situation. Let's find it over here. There we go. Let's put the options up there. And we'll look at the SPY options. There you go. Vulnerable Democrats are skipping the convention. Interesting. All right. Well, we'll see. It's starting to load. And I'm going to go over somewhere else and take a look on my trading platform. Let's see. Right there. Let's look at, SPY. Enter. Options. Let's see. The 22nd. So we really want to see the options for the 23rd. I think that's it. 1 day. All right. So we're looking at where's SPY at right now? Let's put that on the screen. Right there. There's SPY. Activate. So we're looking at the, was that 562.40? So let's look at the what's this? The 563 call. There's the delta. They're not really showing me a price. Let's see. There's the puts. Let's see if we can get this to go. Oh, I think I got it. Let's see. Closed at $1.85 on the call, and I imagine the put would be the 62 put. So it's, what's that? $3.70. $3.70. So they're bracing for some action. The 563 call versus the 564 call, and you can see the product is trading at 562.41. Yeah, they're definitely bracing for the action. They're saying that it could swing $3 at least, if not $3.50 at least at this point. That's what it's saying. $3.50, $2 and $3. No, almost $4. So they're saying it could go down to $5.58 or to $5.66. So they're preparing for action. You're right about that. Let's see. Here we go. We got it up on there now. There's. Can you see that? I think you can see that. Yeah. Let's see which product. That was AMD. SPY. SPY. And let's see if they got some closing prices here. That must be. When is that? Let's see. Two days. Well, I guess they're calling it one day. So there is the five. Let's see, where's the product at? 562. So there is 563. And let's see, where's the call and where's the put? That's the put. So 286 versus 186. So you're looking at $4.50. So we're still looking at 557 to 567. That's what the options are telling us. So it could swing that much. Let's see. Could there be a 10-point move in the SPY? Sure, there could be a 10-point move. Will it happen? I don't know. I just know we're in a daily buy, and the spread is telling us that there could be a 4.5-point move. That's what it's telling us, a 4.5-point move. 70. Could there be? I think you need your offer out there instantly. If you have a 570 call, I think you better have your offer out there before the market's open in the United States. This way, if they jump $5, let's see what. See, that's the thing, is that for a minute or two it's going to be there. The theoretical models will push it there. There's your 570 right there on the put. Let's see. How do I put the call up there? There's the call. There's the 570, and it's trading at 1 cent. The 65 is at 16 cents. I think I would have it offered out there at 15 cents or something like that, or 20 cents. Offer some at 15, some at 20. You can see there's the 64 at 35. There's the 63 at 61. And then 99. So that's 60. Basically 99 there for the 62. And then the put on the 62 put is 62 put is 229. So it's not that high. It's basically 330. So we're looking at a potential move. Yeah, potential move up into the at best I'd say 566. I would say that. I would think 566 on the upside. So you should have your offer out there, literally put it out there today. And let it be a GTC. Good till cancel. All right, we're out of here, traders. It's already, U.S. markets have opened. So this is Doc from North America. We will catch you all tomorrow, same time, same channel. And happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Be safe, be smart.